You've been doing some research and you think that a home equity conversion mortgage might be a good fit for you. The only question you have left is, what's the process? What are the actual steps you go through to get a reverse mortgage? I figured it might be helpful to do a video on this. It's one thing to know all the mechanics of how the loan works, but to know what to expect as you set off on the journey of getting one of these loans, well, that's a whole nother question entirely. So that's what this video is. Not the rules and regulations, not the pros and cons, just the process. From the first phone call all the way to the time that you get your money. Now before we start, I want to ask for a favor. Please leave a like and comment on this video and subscribe to my channel. I'm working really hard to grow the channel and my audience, and I'm committed to putting out accurate and helpful information so people just like you can make decisions with confidence. By engaging with the video and subscribing, you help to tell YouTube that this channel is helpful, which will get it in front of more people. And if you want to chat with me about your situation at any time and how a HECM might apply to your situation and help you, you can use the link in the video description to book a 15-minute call with me at any time. So thanks in advance for your help, and let's dive in. Now, just like any loan, everything starts with a conversation. For me and many other reverse mortgage loan officers, that usually means a phone call. During that initial conversation, you'll discuss some really high-level details about your situation. Now, that could be things like your marital status, age of all the borrowers, address and estimated value of your home, the balance of any existing mortgage or liens, estimated credit score and any past delinquencies, and what your goals for the HECM, how you'd want to use any of the money that you'd get access to. That first call is usually about 15 to 30 minutes, and it's pretty high level. And from there, I'll then take your information and go and run some scenarios. What I'll be looking at is whether at a high level, a HECM loan is a viable option for you and your specific scenario. Now, I'll then report back to you, usually through another phone call within one business day, on what I find. If for any reason it looks like a HECM won't work for you, I'll let you know exactly why, what would need to change for the HECM to become a viable option, and what my recommended action plan is to get from where we are here to that point where the HECM is an option. And if the HECM is currently viable, then I'll go over the details of what my initial review shows. You can think of this stage kind of like a proposal. I'll generally present you with 1 to 3 options for how you can use the HECM, all dependent on getting through some of the later milestones like the HUD counseling, appraisal, document collection, etc. If one or more of the proposed solutions sounds like a good plan to you, the next step is to complete a formal application. Now, you can usually do this in one of 2 ways. It's really up to you. I can send you a link and you can complete the application online, or we can do it over the phone where I just ask you some questions and you answer and I fill out the application on my end. Now, part of the application process either way is to collect some documentation from you that we'll need before we submit to the underwriters. This will include, but not necessarily limited to, things like driver's license, tax returns, Social Security award letters, retirement account statements, bank statements, pay statements, property tax bill, HOA dues statements, all kinds of things like that. Now, it sounds like a lot, but most applications are completed within 30 minutes, and most people are able to get us all the documents that we need within a day or 2. So it's really not that bad. Now, I will also pull your credit report at this time. Now, while the HECM typically doesn't factor in the FICO, the credit score, directly into the loan the way a forward mortgage does, they do care about any missed or late payments that show on your credit report. Now, if these do exist, they likely won't kill the loan for you, but they can trigger something called a LESA, L-E-S-A. Now, a LESA, or life expectancy set aside, is basically an escrow account used to pay taxes and insurance on a reverse mortgage, a HECM loan, just like you would on a forward mortgage. Now, normally HECMs don't have one of these LESA or escrow accounts. You're responsible for paying the taxes and insurance yourself. But if the lender, for any reason, like your credit report, determines there's a risk of you not paying the taxes and insurance or not paying them on time, they can enforce a LESA and set aside some of the available equity from your loan in order to ensure that there's always sufficient equity available for them to cover the taxes and insurance on your part for as long as you live in the home. Now, this may sound nice, not having to worry about paying property tax and insurance, but LESAs can eat a big chunk out of your available equity that you're allowed to borrow against, especially if you're a younger borrower. Lenders tend to be very conservative with these LESAs. They'll plan on carving out a lot more than they will likely need to ensure there's never an issue with tax liens or liabilities on the home, no matter how long you live. Getting back to the loan process, this next step, the ball is in your court once we have the application. Part of the legal requirements for getting a HECM loan is that you must go through an independent third-party HUD, the Department of Housing and Urban Development, counseling session. This counseling session is to ensure that you, as the borrower, have been properly educated on how reverse mortgages work, what your responsibilities are in the home, and the implications of not following through on those responsibilities once you have a reverse mortgage. It also ensures that loan officers like myself are not taking advantage of seniors, which used to be a big problem in the past with these loans, really prior to 2015. Now, I will give you a list at this point of third-party counselors that you can reach out to, but you are responsible for connecting with them, scheduling the counseling, completing it, and then returning back to me with a certificate from them confirming that you have completed the counseling session. Now, the counseling does cost money, and that cost is determined by the counselor, not me, but the average cost is anywhere between $150 and $300. This is a cost that you will pay out of pocket. It usually is about this time that I will also lock your initial interest rate on your HECM loan. These HECMs are typically adjustable rate loans, but we will still lock the rate before closing to determine the starting point for the loan. Now, over time, the rate will adjust, likely both up and down, but we need to know what the interest rate we're going to be starting at will be. Now, next is going to be the appraisal. This is the second out-of-pocket cost for you. Appraisal costs vary from place to place and based on the value of the home and other factors, but it's safe to plan on about $600 to $800 for your appraisal. Now, in some situations, the appraisal cost can be financed into the loan amount, but you still have to pay for it up front. If it is going to be financed, you will then be credited back the amount you paid for the appraisal at closing. Once the appraisal report comes back, which is usually about 5 to 10 business days later, we will then reevaluate. Now, the initial proposals that I present to you, the loan amounts, etc., will have all been based on an estimated property value with estimated equity, typically what Zillow says it's worth. But now that we have the appraisal, we have real concrete numbers to work with. So I'll take that appraisal report and the appraised value, and I'll rerun all of our numbers. You'll be able to review all the details for your loan at this point, including what those numbers are that I've run, as well as the total initial loan amount, initial line of credit if it's available, that initial interest rate, rate adjustment periods, and what the rate cap for your HECM will be, again, if it's an adjustable rate, any term or tenure disbursements if you're going to be getting those monthly payments that are coming to you, all the closing costs, including FHA mortgage insurance, origination, title fees, and more, all of which can be financed into these loans so you don't have to pay for them out of pocket. Requirements around property tax, insurance, HOA, and property condition. Now, that is a lot, but once you're ready, we will then submit the loan to the lender for underwriting. This is where the lender will go through your file with a fine-tooth comb. Now, if I've done my job right, and it's my job to make sure that I do my job right, we'll get an initial approval from the lender and underwriter within a couple of days. Usually underwriting will come back and say, yep, this looks like a good file. We can sign off on this so long as the following conditions are met. Then they'll list off a series of conditions that we'll have to meet for them. These can be anything from making repairs to the home, furnishing some additional documents that weren't included in the initial submission, writing and signing letters to explain any details of the scenario that underwriting isn't clear on, getting a payoff letter from your existing mortgage, resolving any title issues found on the property, and all sorts of other things. Now, honestly, this piece of the loan is why it's so important to have a good loan officer. A good LO knows the business and does their job well before submitting the file to the lender. That way you aren't hit with tons of unexpected conditions that can delay or even kill your loan. Once all conditions have been met, the underwriters will give us final approval, moving the loan to what we call in the business clear to close status. Now, I'll work with the title company we're using at this stage, which you have the right to choose the title company you like if you want to, and we will make sure that all of our final numbers are balanced with the lender, and then we will generate the final loan documents that you'll end up signing. Title will then reach out to you to schedule your closing, where you'll actually sign your loan documents. You can usually do this by going to the title company's office, or oftentimes they can actually send a mobile notary to your home if you like. You'll have as much time as you like at this point to review those final documents and ask questions. Once all the documents are signed, and there's typically quite a few documents, title will then send them to the lender for review. Now this point right here, if this is a refinance HECM as opposed to a purchase, this will start what's called your right of rescission period. Federal law gives you 3 business days after signing your loan documents to change your mind, with no penalties for doing so. Now, during that 3-day right of rescission period, the lender will review the loan documents to make sure there's not any issues at all. If everything looks good and you don't decide to change your mind and take advantage of the rescission period, the lender will wire the funds to the title company and give them permission to disperse. The title company is responsible for making sure everyone involved in the loan gets all of their money at closing, so they'll send all the wires off to any interested parties. This can include any initial payout to you if you're taking a lump sum out at closing, paying off your existing mortgage, or any other liens, things like that. Now, funding for a HECM may also include opening your line of credit or implementing your tenure or term payment schedule, or some combination of those things. If your loan has these elements on it, this is generally handled by the lender or some third party that they use, not the title company. Title will just handle the transferring of funds that occur on the closing day. Title will then record the transaction with the county so they can keep track of mortgage liens on properties. And once the county confirms recording, we are officially closed and you now have your HECM reverse mortgage. From start to finish, most HECM loans take about 30 to 60 days to close and fund. Some of that does depend on you and how fast you move. But if you do have a line of credit or 10-year term payment options available, the lender will set up your accounts and reach out to you within a week or two after that closing date to provide all the information you'll need going forward as far as how to access that line of credit, or if you have questions on your 10-year term payments. And you'll also get a copy of the loan documents that you signed, which will have all that contact information for the lender there as well. And very importantly, as a broker, if you're working with me, I'll be with you throughout the whole process, before, during, and after the loan origination is complete. Now, unlike a bank where if you were to go in and get something like this, you'd get handed off to different people throughout the process, when you work with me, you are my client and I represent you to the lender. So you'll have me in your corner the whole time to answer any questions you have, and I can help throw some weight around if we need to move any mountains for you. So there we have it. It's somewhat simplified, but that's an overview of the start to finish process of getting a HECM loan, specifically to refinance your existing mortgage or to take one out on a home that you own outright. Now, the process is admittedly a bit different if you're using a HECM to buy a home, but not too much. So I hope this information is helpful to any of you that are seriously considering a reverse mortgage in your personal life or for your parents or loved ones. Obviously, if you've watched this whole video, you've probably watched some other videos on this topic. So I encourage you, use the link in the description to book a call with me, and we can chat about your specific situation. You've spent this much time learning, so why not see what's actually possible for your personal situation? Appreciate you guys, and until next time, take care.